Hi, everyone. Thanks for joining us for another quick hit with Complete Intelligence. My name is Tony Nash. Today, we're with Nick Glinsman and Albert Marco to talk about central banks. Nick, thanks for joining us. Can you give us a quick overview of what you do?
Yeah, I do a lot of writing and also some portfolio management. My background was a macro portfolio manager at one of the big macro funds in London, and for quite a few years. And also prior to that, I was Salomon Brothers, and we all know Salomon Brothers background, and I was right on that floor. But now we concentrate on providing key intel, both economics and politics on a global level to clients, be they finance, be they fund managers, be they politicos.
Great. And you've got a fantastic newsletter. So thanks for taking time today. Albert, can you do the same? Can you give us a little bit of background on what you do, whatever you can disclose publicly?
Yeah, I mean, currently I advise financial firms and some high net worth individuals on how politics works in DC, having worked with congressional members and their staff for the past now 15, 20 years. So I'm just basically a tour guide for them to figure out how to invest their money.
Great. Okay. Thanks, guys. So today we're talking about central banks, and given where we are in kind of the cycle, whatever that means at this point, kind of post or late COVID, I guess, we've had waves of support coming from finance ministries and treasuries and central banks around the world. And, central banks seem to be in a very weird position right now. So I'd really love to understand kind of from your point of view, what are particularly the Fed and the ECB thinking about right now? And what are some of the biggest dilemmas they have? So, Nick, if you want to go first and kind of frame that out a little bit, and then Albert will obviously go to you.
Mm-hmm.
Well, given how long I've been doing this, I'm more of a traditional Baghotian central bank watcher. And I would say a couple of key comments to make right now is I think they've lost their independence to a large extent. Harder for the ECB to lose its independence, but with the Commission, you have that loss. I also think that we are de facto monetary financing. And again, I'll go back to the ECB, who literally, for the last month, bought everything that was issued in Europe. And, this reluctance by the Fed to even, they admit talking about tapering, but this reluctance to even consider pull back on the mortgage-backed securities suggests pretty much the same. And it's very clear with a lot of the actions that my interpretation is, one, they're working in cahoots with the political arm. So Treasury in the US, Commission in Europe. Bank of England is a slight exception about to happen, but we can cover that later. So that's clearly going on. And I think, Albert and I do a lot of work together. And I think Albert came out with a comment a while back saying, Yellen wants $6 trillion fiscal. And the excuse that was given, aside from the political bias, was the Treasury market needs it. And interesting enough, we saw the change to the repos yesterday. This was after criticism by a committee that was published in the FT yesterday, and even Bill Dudley's commented on today, suggesting that a lot more work needs to be done to ensure the normal functioning of the plumbing behind the pool of safe assets. So it's clear to me that things are being worked on in a politically coordinated way that impacts monetary policy. Now, I think I think they've got themselves into an economic or a policy black hole. I think the current mindset, and it's been like this since probably 2008, which we discussed earlier, is they're not prepared to accept the economic cycle anymore. So back to one of my previous appearances on your pod, the Fed not doing anything. Yeah, it seems to me that that's an acceptable process, regardless of inflation that is way above their forecast. And forecasting, that's a whole nother bad area for the central bank. Fed's forecasts are terribly wrong. The ECB's forecasts have been wrong for since time immemorial.
Yes.
But the ECBs are more dangerous because they have a bias that keeps them on their policy track.
So first, on forecasts, if any central bankers are watching, I can help you with that. Second, when you say they don't believe in the business cycle anymore, do you mean the central banks or do you mean the political folks?
The central banks, and God forbid, I mean, funnily enough, I'm reading a biography on Jim Baker right now. And, when you look at Reagan, when he came in and there was Volcker and there was economic data was pretty bad back in the beginning of the 80s. No way. No politician is prepared to accept that anymore. And I don't think, to be honest, any of the central bankers are prepared to accept that anymore, or any of the people leading the central banks, being political appointees, of course.
So this is kind of beyond a Keynesian point of view, because even Keynesians believed in a business cycle, right?
I was going to say, it's beyond it. No, it is a Keynesian point of view. It's a traditional Keynesian point of view. The modern day neo-Keynesians, yes, you're right, way beyond what they're thinking.
Right. Okay. Thanks for that. I mean, there's a lot of detail in that, and I think we could spend an hour talking about kind of every third thing you said there. So I really do appreciate that. Albert, can you tell us both kind of Fed and ECB, what are they thinking about like right now? What are the trade-offs? What are the fears they have? These sorts of things.
Yeah. Well, Tony, we'll start with the ECB. The ECB is not even a junior player right now in the central bank world. It's just, I know people want to look at the EU and say, oh, it's a massive trading bloc, so and so. But the fact is that it's completely insolvent. And so besides the Germans and maybe the French in some sectors, there's nothing else in Europe that's even worth looking at the moment. As for the ECB's standpoint, they're still powerless. I mean, the Federal Reserve makes all the policy. They first will talk to the Anglosphere banks that are on the dollar standard, basically. I mean, the pound and the Australian dollar and whatnot. They're just euro dollar, tentacles. But, for the ECB, they're frustrated right now because they see that the euro keeps going up and their export-driven market is just taking a battering at the moment. But they can't do anything because the Fed goes and buys euros on the open market to drop the price of the dollar to promote the equities in the United States, and that's just what's happening right now. Now, when it comes to the Fed, we have to look at what is the Fed. Right. Normally, what everyone's taught in school is like an independent, entity that, looks over the market and so on and so forth. Right. But these guys are political appointees. These guys have money and donors and, they play with both political parties. Right now, the Democrats have complete control of the Federal Reserve. And everyone wants to look at Jerome Powell as the Fed chair. But I've said this multiple times on Twitter. The real Fed chair is Larry Fink. He's got Powell's portfolio under management of BlackRock. He's the one making all the moves on the market with the market makers and coordinating things behind the scenes. He's the guy that look at, not Jerome Powell. I mean, if anyone even watched Jerome Powell's speech yesterday, it was appalling.
Yeah.
And he was overly dovish, but I mean, that's a script that he was written. He's not a smart guy, in this playfield, in this battleground. He's not that smart of a guy. What is he, an attorney?
He needs some media training, actually, I think. Is a good first step.
He's being set up to be scapegoated for a crash. He's a
no one to shut up.
You know, he's a Trump appointee. So next time there's a crash, with whether it's 1 week from now or 1 month from now, it's going to be pointed on him. Like, you know, he's the Fed chair. Look at the Fed chair. Don't look at everything else that the political guys have made in policies in the past, 4 or 5 years that have absolutely just decimated the real economy.
This time reminds me, and I'm not a huge historian of the Fed, but it really reminds me of the Nixon era Fed, where Nixon and his Fed chair had differences, and they were known, and then the Fed chair ended up capitulating to do whatever Nixon wanted to get back in his good graces. Does that sound about right, or are there other examples that are more relevant?
No, that's a perfect example. I mean, this idea that's floated around by economists that economics and politics are separate entities is absolute fantasy. It doesn't exist in the real world,
Can I just pop in on this one, because there's a new book out which I've started 3 days at Camp David.
Okay.
And it came out because it's coming up to 50 years since that decision.
Yep.
Of the gold standard.
Yep.
Now, it's just interesting you brought it up, because if you think of one of the rationales for coming off the gold standard, there's several, but one of the ones that struck me as I was reading, actually the review, the back cover, short précis, this enables the government to start printing in terms of fiscal. That's what it did, in effect, right? Mm-hmm. Okay, so first of all, that's one of the biggest arguments against people who argue for a return to the gold standard, because that would decimate things, or cryptos being, a limited supply of crypto as the new reserve currency, because again, you'd be pulling against the elastic, and you wouldn't get, the economy would just go
right.
Boom, right? So that's where I think there's this huge, I've always said that actually what we have is what we're going to ultimately see is exactly the same cost that came with Lyndon Johnson paying for the Vietnam War, COVID, and then the Great Society, which is, right, Joe Biden's what I call social infrastructure and green goals plan. Okay, So going back to that, Nixon was paying part of the price for all of that.
Of course he was.
With Volcker, right?
Yep.
And so I actually not with Volcker, I beg your pardon. So I actually sit there thinking, well, there are similarities right now, and we're seeing effectively a central bank and a treasury, wherever you want to look, untethered from what used to be, well, before I started in this business, what used to be part of the discipline. But even when they came off the gold standard, there was discipline. As you referred earlier to, traditional Keynesians believed in the economic cycle of boom bust. Boom, you tap the brakes a little bit, take the punch bowl away. That's gone. That is, for me, what's gone on recently. I don't know whether you would say it's since the 08 or more recently, is the equivalent of that 73 meeting where they came off the gold standard. People have just said, no more cycles, tapping the brakes, and now the central banks are in a hole and politicized. They're not independent because they're in that hole.
Yeah, that's real quick, Tony. That's exactly right. I mean, even I was on Twitter saying we're going to go to 4,400. We're going to go to 4,400, and people are like, I'm like, no way, we're in a bear market. This thing's going back down to 30, 37, whatever, charts and whatever Bollinger Bands you want to look at. But the fact is, because of the politics, has a necessity to pump the market and then crash it to pass more stimulus packages. It was the only way was to go up to 4,400 plus.
Right.
You know?
Right. Okay, now with all of that in mind, Nick, you did a piece recently about the Fed and housing and some of the trade-offs that they're looking at with regard to the housing market. Now, housing is an issue in Australia, it's an issue in the UK, it's an issue in the US and other places. Can you walk us through a little bit of your kind of reasoning and what you're thinking about with regard to the Fed and housing?